Periodically, you may be asked to summarize the state of security or compliance for an 8K or a 10K, which are defined by SEC regulation SK. The 10K is a required SEC annual filing for publicly held corporations. You could think of a 10K as sort of an annual report on steroids. You may be very familiar with what an annual report is and the types of information that you find there, but the 10K is a much more detailed description of the financial condition of the company. There are certain types of information which are generally included in the report, and I've listed these on the slide, such as the history of the company, the organizational structure, financial statements, earnings per share, the subsidiaries of the company, the executive compensation, and other relevant data. Some of the required sections of the 10K are business, which is a description of the company and those products and services that the company provides. Risk factors listed in order of importance facing the company in the past, present, or future. Depending on how much detail is provided in the 10K about these risks, you may report on, say, compromises in the company that occurred several years back, which may still have some lingering impact on the company. You'll put out selected financial data. So this may be financial information for the past 5 years, but you're focusing on recent performance. And this is really just selected financial data. This is not the detailed financial statements of the company. Management's discussion and analysis, MD&A, which allows the management team to provide an analysis of the financial condition of the company. And it's basically an explanation for those things that you may see in the financial reports or in the financial data that explains either good or bad performance over the previous year. Another required section is the financial statements and supplementary data. And this is where you'll have those audited financial statements, the income statement, the balance statement, the statement of cash flow. And you also have a letter from your independent auditor stating the scope of the audit that they performed. Security and compliance risks are generally appear in 3 sections. Risk factors, which I think is fairly obvious. Management discussion and analysis, and in the financial statements and supplementary data. In the risk factors section, the most significant factors that make the offering speculative or risky are defined. So if you think about cybersecurity risks, they may increase or may certainly impact the risks that face the company. If, for instance, you have credit card data that you collect, process, transmit, then those risks certainly are higher than a company who does not process or store credit card data. So you certainly want to analyze what risks, either from a cybersecurity perspective or a general security or compliance perspective, that could impact the company. It doesn't mean that there is a problem with your operation. You're just simply describing those parts of your operation which could add to the risk factors of the company. And what you're trying to provide is information for the investing public on what parts of the investment are speculative or risky to their investment. Now, this detailed, like I said, can be either detailed or less detailed, but it has to be a complete description of the risks. This kind of reminds me when I had students do case studies, and the first thing they would always ask is, how many pages do I have to write? It's irrelevant. You want to provide a complete description of the risks. If that can be done in a paragraph, great. If it takes 3 pages, great. The object there is to provide a clear picture of the risk, not limit it to a certain amount of space in the 10K. You want to consider all the relevant information, particularly prior cybersecurity incidents where there may have been either data lost or not lost. You might want to talk about the severity, the frequency, and the probability and magnitude of future risks. And there you can go into more detail of how you have established a cybersecurity or compliance framework to protect against the loss of data or intrusion or compromise by an outside force. And it's not just about consumer information. You need to cover intellectual property, interruption of business, or any other element that could impact the performance of the company. In the management discussion and analysis, this is where you'll have discussions on the changes in the company's financial condition. This is such as the results of operations, but the detailed financial statements, as I said earlier, are not in this section. Here you're looking at, quote, any unusual or infrequent events or transactions or any significant economic changes that materially affected the amount of reported income from continuing operations. So what you're looking for are unusual events or transactions, which certainly a cyber security event would classify as, but you're looking for materiality, materially affected amount of reported income. Materiality is certainly an interesting concept. There's no real set amount that makes an amount material in your reporting, but it is an amount that the company feels had a negative impact on the financial condition of the company. For some companies, that may be a very small number. For other companies, that may be a very large number. But materiality has to be understood and explained if it relates to a cyber event in that section of the report. Description of the business. Here you may have some reporting of the cybersecurity framework and compliance framework that you're using, but generally you're describing the development of business over the previous 5 years. So if you have a cyber incident that materially affected the company, you certainly might talk about how that has impacted the company over those 5 years. But you may look at products, services, relationships with customers, relationships with suppliers, and the competitive condition that any of these cyber events may have impacted due to its impact on the company. In the book, there's a very detailed example of how Walmart reported their cybersecurity risks and framework in their 10K, and a less detailed example by Berkshire Hathaway. Neither one of them is right or wrong. Certainly, the more detail you provide, you have to be careful that you're not providing enough detail for somebody outside the company to use that detail to attack your company. But on the other hand, you don't want to have so little detail that it doesn't adequately describe the risks associated with that cybersecurity framework. The other document that you may be asked to comment on is the 8K, which is called the current report. Certainly, if you're disclosing data breaches to investors, those comments will appear in the 8K. So you should file it as quickly as you can and disclose the costs and other consequences of material cyber incidents. So if you have somebody knocking on your door looking for open ports, etc., You're not going to report those in an 8K. But if somebody comes in and steals 100,000 credit card records, you'll certainly disclose that in an 8K. It's interesting because there's no time frame on when you have to file this. But if you remember back to Unit 1, we talked about disclosure to the state's attorneys generals. So if you have a breach, those have to be disclosed to the state's attorneys generals, and that's public record. So if people see disclosures to those state's attorneys general, but they don't see a corresponding 8K also hit the street, then they'll start pressuring the company to produce that 8K. So the longer you wait to produce the 8K, the greater the impact on your reputation as a company. But at the end of the day, it's not a required filing. However, most responsible companies will file an 8K to describe data breaches to their investors so that the investors have a clear picture of the breach and its impact on the company.